IPO is initial public offering. You need money to expand. You go to the stock exchange and you get in money. How many of you remember when Dasat, Starcoms, and the likes were doing IPO? Even though they seem to have Shabo. That's when you go to the capital market when you need long-term funding, and you go to the money market when you need. But now we are talking of investment, so we're not talking of borrowing. So let me flip it. A money market is typically safe, and it's where you invest in instruments that are short-term, like 1 year, 2-3 years. So for example, companies issue commercial papers. So if you were interested in an MTN commercial papers, for example, commercial papers is like a note, a debt note. You could, well, typically they like high investors, so they like an investment of a minimum. The minimum investment is usually around 5 million. But you could go in there, buy commercial papers. You can go to your bank and do fixed deposits. They are very safe because first and foremost, you know that your capital is guaranteed. Of course, the return can be low. And then if you wanted to do long-term investments, you look at the capital market. That's where you want to invest in bonds, you want to invest in stocks and shares. Always ensure that your investment portfolio has a mix of short and long-term, because you don't want a situation where, for example, you needed money for something and then you go and break something you don't want to break. So for example, if you had invested in shares and then, let's say you had invested in shares in January last year, and then March, COVID happened and the market crashed, and you needed money, your rent was due in April, and it is that money you plan to use, then you go and sell those shares at that low rate, and then you end up making a loss. But if you had a mix, for example, before you start investing, a wise thing to do is to have an emergency fund. How many of you here have an emergency fund? How many of you here have an emergency fund? So an emergency fund is, as the word suggests, is a fund you have set aside to be used only in cases of emergencies. So first you start savings, right? We have talked a lot about savings. Now when you save, so what do? Of course you want to move to the next step to invest. But before you start investing, ensure you have, some will say what you need to spend for 3 months. I would say make sure you have your rent and 3 months living expenses set aside. See, if you have shelter problems, that's when you know that life is hard. At least, even if you don't, you use Gary you are drinking, you are in your house, your landlord is not disturbing you, you are just drinking the Gary, peace of mind. So I would say have your rent, 1 year's rent, and what you need for 3 months. So if you don't earn salary, if you don't receive any income for 3 months, do you have that money that you can spend? And particularly if you're a family person, it is very important. You don't want a situation where your child falls ill, and then you are calling your pastor, your leader, sorry, hospital bill. And then what is even annoying is when some men have pregnant wives, and when their women are in the hospital is when they are calling. I'm like, you had 9 months to save. Now, what do you do with an emergency fund? You put it in the money markets. You put it in an instrument that is safe. Safe means your capital is guaranteed. It's not kalo. You're not putting it in stocks. So, for example, you put it in a money market fund. You put it in a mutual fund. You put it in a fixed deposit. Put it in a safe investment and in an investment that you can easily liquidate. I mean, it's for emergency, right? So, for example, for most mutual funds, they will tell you the minimum holding period is 30 days. So you know that after 30 days, you could always withdraw it. If you put it in, I wouldn't even say a fixed deposit per se, because if you go and lock it in a 2-year fixed deposit, you may pay penalty, yeah? But if it's a mutual fund, you don't get to pay penalty. Don't put it in a savings account. Let it earn interest, though. Let it earn interest for you. There's something called inflation. I don't know if most of you are familiar with inflation. How many of you are familiar or you have heard of inflation? Now, The current inflation of Nigeria, if I'm correct, is about 16%. Do you know what that means? That means that if you have 100,000 right now, in a year's time, the purchasing, if you had 100,000 last year, this year, the only thing you can buy with that 100,000 is 94% of that 100,000. That's probably about 94,000. This one, that one, go to Oxford and come back. I'm sure you all hear that story. But now, one era, it's non-existent. That's the power of inflation. Inflation erodes value. And so that's why you want to make sure, if you understand investment very well and you talk to a financial expert, what I try to do is make sure that the weighted average return on my portfolio is above inflation. Of course, you are going to have some investments that will give you maybe 5%. You have some investments that will give you 10%. But there are some investments that should give you 15%. Close to 20, such that by the time you do a weight, if you stay, it doesn't matter if you look at the money, you're like, okay, yes, last year I had 100K, now I've been able to grow it to 500K, my target next year is to grow 1 million. How much was Gary last year? How much is Gary this year? Your landlord is going to increase his rent. He's not going to care whether they increase your salary or not. The person selling Gary doesn't care what your salary is. Even the person that it not affect, though, as long as they hear that dollar has gone up, everybody increases their prices. So you are only getting richer if your weighted average return is outperforming inflation. That is net after taxes, because remember, when you put your money in most of these investments, you pay tax. So net after tax, if it is not outweighing inflation, you are getting poorer. So I don't want a situation where you retire. The money was big, you retired and you have 10 million for money to enjoy, because 10 million now cannot be, it's nothing. That's not where you want to be. So you want to have your investment that you can control, that outperforms inflation. And that's why, in Nigeria, it's worse because there's also another risk called devaluation. You are dealing with inflation as if that's not enough, and then you have to deal with devaluation. And then we are in an import-dependent economy. So as long as dollar keeps going up, inflation keeps going up, devaluation keeps going up. You want to buy something, you want to send your child to the good schools abroad, or even want to buy something, even if not something from abroad, prices of cars have jacked up now. Why? Just because of devaluation. And so that's why you want to outperform inflation and put a portion of your money in FX so that you can also outperform devaluation. That's how to build wealth. Next slide, please. Okay, so here we'll be talking about types of financial assets. I have probably spoken to a lot of them, but I'll speak to it again. Let me focus on, I've talked about pension accounts, we've talked about putting some of your money in FX. I've told you what treasury bills are, they're 5 or so. So that's, you could do that. You could go to your bank and say you want to buy treasury bills, and you could buy that. But they are short-term, market bonds. Well, most bonds are usually issued by reputable firms, but just make sure the company issuing it is reputable. And then most times, corporate bonds give you a higher yield than federal government bonds, because like Mr. A.S. said, so they typically give you a risk premium. Yeah. So that. Now, let's talk about stocks. Before I go to stocks, let me talk about mutual funds. So mutual funds is one way you can invest without having one-on-one professional advice. So for example, if you cannot maybe afford to have a financial expertise at your disposal, one way to leverage professional expertise is mutual funds. So mutual funds are collective schemes where subscribers pool money together to invest in particular instruments. So for example, go to the next slide. Next slide, please. Thank you. So most of you have probably heard of Stanbic, ARM, and the likes. So usually when we have a money market fund, yeah, but we have just one fund, a money market fund. But when you go to an ARM and a Stanbic, for example, you see that they have different mutual funds. Some of them even have halal funds that speak to Sharia. So basically, what they try to do is, these are the popular kinds of mutual funds, but there are others. Some of you that probably read on Bloomberg and the likes, you probably have heard of, even in Nigeria, we have exchange-traded funds. We have funds, for example, that track NSE 30, that track US stocks, top 40, that track tech stocks. So they are funds. So they are houses that come together and say, okay, you know what, you may not want to go and invest directly in Zenith Bank, because you may not know the ins and outs or understand the stock market. But then I'm creating an equity fund. So that equity fund is a mutual fund where all of you subscribe, bring money together. The financial experts take the money. They understand the stock market, so they know when to go in, they know when to go out, they know the stocks to buy, they know the stocks not to buy. And of course, they share the returns. When they receive the dividends and the capital appreciation, they share it. So that's a safe way to shield yourself from maybe the volatilities of the market if you're not comfortable with that. But the honest truth is that the average return is usually less than if you invest directly, yeah? And then sometimes, so not all mutual funds guarantee your principal. So equity mutual funds, for example, doesn't guarantee your principal. If the market is down, your return can be minus 30%. It is what it is, yeah? So, but then, high risk, high return, how many of you have heard of it? It's the truth. Low risk, low return. That's why you want your portfolio allocation to be a mix. You want it to be balanced. You want it to have low risk. You want it to have high risk. You want it to have safe. You want it to have some volatility. That's the only way you can make money. There is no safe investment that will give you higher than inflation rates. Treasury bills, and you go and, how much does the bank give you on your savings account? So if you have to be willing to take some risk, but then you want to be sure that your portfolio is balanced. That's the key, really. That's why you need to have your emergency fund, so that you don't ever come to this your portfolio, and then you want to make sure that you have a balanced portfolio. So there are different types of mutual funds. There is balanced funds. There is the money market fund. Money market funds basically invest in money market instruments, which are safe. So they invest in commercial papers, they invest in fixed deposit, treasury bills, and the likes. So for most money market funds, your capital is guaranteed. And like I said, GDL has a money market fund. Then we have fixed income funds. So fixed income funds invest in fixed income securities. So for fixed income funds, for example, they will invest in government bonds and the likes. For some fixed income funds, your capital is guaranteed. For some, your capital is not guaranteed. Some things that, I think there was a post that was trending one time where somebody said he invested 100K in one, is it equity funds or one fund like that? And after 5 years, after many years, what they are paying him was 90, he got 90 something back or so. He didn't understand what he invested in. He invested in a fund that did not have guaranteed capital. And at the time where he withdrew that fund, the fund was down. So you can track the return of your funds. You can tell them to send you monthly statement. They can tell you this month, the current return now is 5%. You know that, okay, you have gained 5%. The next month, your return can be minus 30%. That's why you want to have that. I invested in one instrument last year or so. They were doing as high as 11%. This year, I just said, let me go and check. I said it was at a 3%. I said, why? Immediately, I reduced, I liquidated, and I went to invest in another one that was giving me 7%. Track your money. Inflation is real. Okay. Then there is a balance. There are some that are balanced funds. What they try to do is do a mix of, safe and volatile, low risk and high risk. Next slide, please. Okay, yeah, this is just speaking to what I spoke about. There is the low returns, there is the high returns, less risky, high risky. If you want low returns, of course, it means you are taking less risk. And You get financial security. If you put your money in bank accounts, your capital is guaranteed, except if the bank goes on. And if the bank goes on, now there's NDIC anyways. Your pension funds, financial security, some money market instruments like treasury bills and like. But then, like I said, the return is low. If you invest in treasury bills now, it's currently about maybe 9%. Inflation is 16%. If you invest in that treasury bill, 16 minus 9, 7%. You are getting 7% poorer. That's why you need to have a mix. And then there is the growth, and there is, if you want growth, you have to invest in. Okay, next slide. Next slide. Okay, now let's talk about stocks. So if you are here and you still believe in that myth, or if you know anyone that was hurt by the 2008, I think it was 2008 crash, and you are still here thinking, oh, stock, no, never again. Calm down. There is money in the stock market. Of course, so the Nigerian stock market is narrow in that you probably cannot count up to 20 stocks that are strong, that you can trust the company. But in that 20, if you know this cycle very well, if you are friends with your broker, for free, they can advise you. They can, if you're friends with your broker can call you and say, sell, buy, for free without paying your broker, you know. And so, for example, so I have 3 minutes more, but let me talk about this slide. Example of selected stocks in the market. So, for example, these are like 11 stocks that are good and have good track records. So, for example, look at their dividend yield. This is the price as at 7th of June. So as at 7th of June, if you buy Zenith at almost 23, you get a dividend yield of 11.6%, 11.7%. What does that mean? That means that even if the price does not go up, if you just buy it at that current price and you wait for 1 year to collect your dividend, the price does not go up, you get an 11.7%. That's probably higher than the money you are placing in fixed deposit and the like. So why is your money still there? Remember, you need to have a balance. But just saying. And then these are their 52-week high and their 52-week low. Now, this 52-week low price is impacted by COVID last year. But then, so if you know this market very well, for example, you could have bought Zenith. Imagine you buy Zenith at an 18 naira, and then it rises up to 28 naira. That's how much? That's 10 over 18. That's how much? Almost over 50%. So in a year, if you know the right timing, for example, you could make over 50% just from your money you put in stocks. Last year, we made a kill from the stock market. You know, the stock market crashed during the pandemic, and we bought. Of course, we were scared, like, when will this go up, when will this go up? But then, towards the end of the year, voila. By January, okay, so at Expo, most banks in the stock market, their rally is January. So there's something called January highs. So usually from Mbamba months like September, October, the stocks are usually okay. So most people buy then. And then January is most times their highest prices. So if you know that market, you can go in during the Mbamba month. And then January for stock markets, that is when their prices usually hit this 52-week high. So you could sell GT at 33, 38, sell Zenith, and make a cool 50%. So if you can carry the money and go and put it in fixed deposits, but you know you have made that. So stock market, for example, if you understand it, is one way to beat devaluation, beat inflation. Okay, my time is up. Thank you. I think I should take questions. I think I should take questions at this point. So I'll take questions. So, okay, please, can you go to one slide? Sorry. A slide after that slide. I just want to show you an example. Okay, here. So this is an illustration of Zenith Bank, just to give you an illustration. So if you had invested 100,000 naira in Zenith Bank in 2004, right now, well, at least as at 2019, when Zenith Bank was only valued at 18.6, so now it's at 28. You would have, your 100,000 would have risen to 882. Why? At 11 naira point 44 average price in 2004, you'd have bought 8,741 shares. There's something called bonus shares, so sometimes they give you bonus shares. So as at 2019, you'd have had a cumulative shares, just bonus alone, of 15,000 units. Now, at a stock price of 18.6 in 2019, your total value of shares, that's 15,000, will be 284. But guess what? Remember, I talked about dividends. So you would have received an after-tax dividends, bonus, all of those, of 598, which would have given you an ROI of over 400%. So, but as I said, there's actually a slide there, but don't let me go there, on balance. So age is very key. If you're 40s and below, you can take some risk here. So you might want to have a balanced portfolio, for example, where you put maybe 40% or 50% in stocks. If you do crypto, I don't have a problem with that, but just make sure it's just about 10% of your portfolio because it's highly volatile. If you trade Forex, I don't have a problem with that. Trade Forex, not USD. Just make sure it's a maximum 10. Maybe you can stretch it 20% of your portfolio and then put the others in safe instruments. I'm a believer in play. So make sure you just have a balance. You may want to do high risk like stocks, 50%, and then put the other 50% in safe instruments like bonds, like your mutual funds. But just make sure that. But if you are 50 or close to 50, please put all your money in safe instruments. Please, thank you.
Thank you very much, Ma. So there are some questions on Slido. I think that you've already answered question number 1, but I'm going to go straight to number 2. It says, what other investments like real estate, etc. portfolios would you advise and why?
So for real estate, I think real estate is a very illiquid asset. So because of that, except if that's your business, I don't think it should be more than 10% of your portfolio. Let me explain. If you have crisis and you want to sell a land, most times it will be distress sale. It can take 6 months for you to get a buyer. And when that buyer sense that you are desperate. And then for me, it's about the return. So for example, I don't have real estate. When people tell me, come and buy this land in Ibeji, they're like, okay, to appreciate. I'm always looking like, okay, what's the capital appreciation rate? Okay, where will it get to in 3 years? If I put that same money in stock markets and I work with my broker, can I get the same return? Then it's better. Because if you want to buy stocks listed on the stock exchange today, you don't need to look for a buyer. Just tell your broker, sell. They will sell. It is a market. It's like going to the bank to do fixed deposits. So it's more liquid. But of course, you can do real estate, you can do crypto if that's what you want. Just make sure that it is just a small fraction of your portfolio so that it doesn't drag down the whole portfolio. That's my take.
Thank you very much. Another question says, what has changed since the capital market crash of 2008?
What has changed?
Yes.
Okay, so what made that stock market crash was the bubble. So there was no fundamental supporting that increase. But anyways, after the crash, we have, what's his name? The CEO who just retired of the stock exchange has served for, I think, about 10 years now. And he has put in place some regulations that have stabilized the market. So, for example, a stock market cannot move more than 10% in a day. So regardless of if people conspire together and say they want to push it, it will not go higher than 10% in a day, for example. And it will not go down below 10% in a day. Because some of you understand that one of the reasons why that happened was because, it just kept going down, down, down. There was no bottom. Yeah, but now there have been some regulations around this. And then that's why it's important to also invest in stocks that are sound. There's some stocks that are in that stock market that, do you know the lowest price a stock can get to is 20 kobo? So you can buy a stock at 5 naira and it will end up getting to 20 kobo. Yes. That's why you want to invest in sound stocks. There are very few. There's the likes like GT, Zenith. You know that before these ones go down, the economy of Nigeria will go down. There are stocks like that. For example, there's a stock like Nestle. It doesn't move a lot and it doesn't give a lot of dividend yield. But most people that invested in it, pensioners, all of those, because they know that it is as strong as Nigeria, even stronger than Nigeria. So just make sure you invest in solid stocks. You are tracking their performance. You are tracking all of those. You'll be fine. And then, of course, talk to you. If you have, be friend to your broker. Be friend to people that are managing your money. Be friend to your broker. Be tipping him, send him recharge card. So I can be calling you and say, buy. Sell, oh.
Thank you very much. One more question. One says, why is it that agro-allied companies are top listing on the Nigerian Stock Exchange? Agro-allied. Why is it that agro-allied companies are top listing on the Nigerian Stock Exchange? Yeah, maybe are not. Maybe the question should be are not top listing, because I know that agro-allied are not top listing on the stock exchange also. Yes. Why is it that they are listed, or why is it that they are not listed based on your experience?
So I'm not sure I understand that question correctly, but let me just try to explain. I'm not sure we have like top listed agro-allied. We have a few like Presco and the likes, but then people don't decide. We can't decide the companies that come to the stock exchange.
Nestle. Is Nestle not agro-allied?
It's FCMG.
FCMG.
So the agro-allied, what's the name of these people that produce palm oil?
All this palm oil producing and stuff.
Yeah.
Those are the agro-allied, right?
Yes,
okay.
yes.
All right, so one quick question. What's your take on the continual devaluation of the Naira? Is it a natural devaluation, or is it as a result of government influence? Lastly, is it going to get worse? Is it going to, I think the last question is very important. Is it going to get worse?
Number one, I am not Buhari.
Sorry?
Number two, I am not Emefiele.
I think, put your hands together for Perpetual. I am impressed. I think we can clap one more time. First of all, I don't see a lot of women, that are very financially savvy, so I'm really excited about that. And I hope women, you're going to take a cue from that and try to understand how money works. Two questions I want to address. The agro-allied. Don't forget that up until recently, nobody paid attention to the agro sector. Until when there's the dwindling nature of oil and all that we started doing this. How many people bought Nigerian rice 5 years ago? Nobody. In fact, when you buy Nigerian rice, you're looked at as poor and low. Now, all over, what we now have is Nigerian rice. So, if an agro company starts, this may be a good time, and they're on the stock exchange, for you to quickly come in. Because the best strategy for buying stocks is buy low, sell high. And then the penny stocks, the single-digit stocks, they may start like that. But what we all do is we go to crowdfunding for our Greek. And because we want the 30% and the 40%, and that's where we're going to get burnt. Because agric is in sections. What do I mean by sections? If you're planting watermelon, it has a gestation period. So if the agri farmer comes to you and says, come and invest in my farm, ask him what is he planting. If he's planting watermelon, is it going to be for 60 days, for 90 days? That means the cycle will be from planting to harvesting and to returns will not be more than that. If he promises you 40% in 1 year, it's a lie. He can only give you that 40% within that period, depending on the fact that you have put all your money in that sector for that time. You have to look at the integrity of the person. Most people get the first returns, and then the next one, they will miss it. So you need to be very careful. If the farmer is not your best friend, is not your cousin, and there is no insurance on that investment. There are some of those investments that are insured. Okay? So ask for the insurance. Ask for the return on the insurance. Get someone to read the dotted lines and know that your investment is safe. The second question I want to address is real estate. Real estate can give you 100% return. But it depends on which side of the divide you are. Are you the player? If you are a builder, you are in control of that, then you know that you can get up to that. But if you are crowdfunding the real estate, you need to be careful. Last year, I know someone that invested about $500 million, like 500 million in real estate. And then because nothing could happen throughout last year, and when COVID was eased off, they now asked them to be sending 15 people to a site that would ordinarily take 200 people. That means they could not deliver on the time. And time and real estate they work side by side. So the projections failed. Do you understand what I'm saying? They had to be moving deadlines by, say, 18 months. And whilst they were moving it, cement moved from 2005 to 4,000 naira. Iron moved from 119 to 400 naira. Paint. We painted this place, right? We're using a bucket of paint. We're using a very special paint because of the height at 75,000. I bought one on Friday at 120,000. The same paint. Because the paints are the components of the paints are being imported. So right now, what we're trying to do, doing this KAYEP, is to open your eyes of understanding. Somebody say, enlighten my eyes of understanding. So that you can now think and ask yourself. I would recommend that, I'm not a shareholder in GDL. I was just asking her, where is your office? For starters, they're in Ilupeju, which makes it good. Go there and say, I have 100,000 naira. What can I do? Let them advise you. Okay, when they tell you all you can get will be between 8 and 10,000, don't feel sad. Start with that. You see, what happens to consistent savings is time and chance happen to them. God rewards discipline and diligence. But we always want kalo. Make it quick. And that's how we get into trouble. I think that would help you. Thank you.
So I just wanted to share something to what Pastor Fumi said. Thank you, ma'am. She said something about insurance, for example, for agro companies. Whatever you're investing in, just take time to do some Google search or even talk to someone in that industry. So, for example, a friend of mine saw advertising stuff on Instagram, and they said they were promising 50% agro. And then he said, oh, this is now. I'm like, oh, okay. Are they insured? Like, they said they're insured by one company. I said, okay, call the insurance company. And he called the insurance company. The insurance company said, no, we have not finalized this. And then he called them, and they said, yes, we are still in talks. I said, yes, your money wants to go. So just either look at the reputation of the company issuing it, or look at, okay, what are the mitigants? High risk, high return. Take high risk, yes, but make sure it is calculated risk. Calculated, yes. Thank you. Naira devaluation. You know, someone said something one time that if I have to bet, I'll always bet against the Naira. I remember there was a time dollars was about 120, 150, and now it's at a 505 or so. And so I think I can't speak to if it will get worse in the long term, but with this regime, I think it is wise to expect that it will get worse. It is managed. I didn't expect that it will cross 500 because it's also good for politics. So, for example, when this regime wants to say how they are faring, they don't want people to benchmark them and say, oh, this. But it seemed that we have a regime that is focused, that don't care about that. They are focused on Ruga and IPOB.
Thank you very much. Thank you. Somebody says, I think some of these questions have been answered. I'm just going to look at one that hasn't been answered, so maybe we can. Okay, so somebody asked, can I invest in FX through your organization?
So we take in deposits. We take in FX deposits. So technically, you are not investing in FX. You just buy FX from your bureau de change, and then you either leave it in your DOM account. It doesn't earn you interest, or you look for placements to put it. So we take placements in FX. There are dollar-denominated mutual funds that you can put your money in. Some of them invest in Euro bonds, for example. Make sure your money is earning interest. Don't just say, okay, because you have put it in dollar, you now keep it in your dorm account. Even if it's 2%, let it be any something.
Okay, so we have 3 minutes more. I'd ask 2 questions. Mr. Kola, no, you spoke about emergency funds. Is it a savings, and where should we put it?
It's not savings. So it's every money you invest or you put in emergency for whatever, of course, come from your savings. Yeah. But savings accounts probably gives the lowest return. I think currently the interest rate on savings is 1.25 or so. Inflation is 16%. What happened to the 15%? So put your money. So because it's an emergency fund, you want to put it somewhere you can easily get it. But look for the safe investments. Look for the one that gives you the highest return and still meets those needs. So for example, their money market funds is currently at a 5-6%. That's higher than a 1.25%. Don't put it in high risk investment. Don't put it in stocks. That's not what you put in stocks. That's not what you put in real estate. That's not what you put in crypto. That's not what you put anywhere. You put it in an instrument that is safe and you can easily get it. Maybe with an app self, you just liquidate, or with a call, you liquidate. But try to get the maximum return even within that market.
All right, thank you very much. And then final 2 questions. One, how can we identify a good broker? And then second, what advice would you give someone who borrows from a bank to invest in on the stock exchange? Identifying a good broker and then borrowing money from the banks to invest in the stock exchange.
I'll start with borrowing money to invest in stock exchange. For me, it's dicey. Let me explain. If you borrow money, for example, at a 5% per annum, and maybe you put it in a very solid stock, like Zenith Bank, for example, and that gives you a dividend yield of 11%, you're smart. Because you earn 11 minus 5, you earn 6%. But you see, if you take that money and you put it in, and so stocks that are very solid don't move like that. But there are stocks that move. There are stocks that are at a 20 kobo today, and tomorrow you have gone there, they're at a 50 kobo. So they've given you over 100%. But you see, that's the way they can go down. So if you borrow it to put it in something that is not fixed, so to speak, because when you borrow that money, your interest is fixed. They're not going to come back and say, because you lose money, whatever. And then there are some solid stocks. GT and Zenith, for example, they're always competing. So no one wants to give a lesser dividend. No one wants to declare a lesser profit. So to a certain extent, you can say that if you put your money in GT or Zenith, your dividend is sure, except if something happens to Nigeria. I can give it to you, you're smart. But if you put it in some stocks that you are not sure of, the money can go and the bank will still come and hold you. So, and then I want to, there's an idea that is interesting related to that says, there's a principle that says, never spend your principal, only spend your interest. And what does that mean? It says that every money you have is a seed. So it can be a seed to be given to God. It can be a seed to be invested. It can be a seed to start business. But see that money first as your capital. So, for example, something the rich does is whenever they want to buy something, they are not looking at how to go and take from their seed, from their capital to buy. They are thinking of where they can put that money that will give them that return, that they will use to buy it, and their principal will still be safe. So you want to buy a car, for example. I know very few people that are very good with this stock market, that whenever they want to buy a car, they are not thinking of taking that 2 million or 3 million in their account to go and buy a car. They are just waiting, position, looking at the stock market, tracking it. They know when to enter, and they know that maybe they'll get 50% or so of their money when the stuff goes high. For most banking stocks, usually January high, and they cash out. They get their 50%. Some of them can even borrow, depending on the stocks. Like I said, depending on the stocks. Get the money, use the return and maybe a small portion of their principal to buy the car, and they still have their money. But you need some financial savviness. And like I said, if you want to go into stock market, be friends with your broker. Send him a recharge card. Call him. Be his friend. He will give you inside tips.
How can we identify a good stockbroker?
Okay, how do you identify a good stockbroker? Please don't go to Perpetual & Co. stockbroking firm. Their names. So, for example, you hear of Lead Capital, you hear of GDL actually has a stockbroking firm, just so you know. But make sure you go to a firm that you know the name, or you know the MD, like Mr. Macaulay, or those kind of firms. So, for example, if you buy stock through Bamboo Trove, I'm not sure that you own the stock, so it might be so maybe into US stocks, because you probably cannot access the US stock market directly. Maybe, but if you're buying Nigerian stocks through Bamboo Trove, Bamboo and Trove, I'm wondering, are you sure there's an entity called CSCS? They are the ones that sort of hold stocks and they have their record. Do you have a CHN number? A CHN number is clearinghouse number. If you say you own GT shares and you go anywhere, it is that CHN they will use to track. Bamboo and Trove gives you CHN number, for example. Things like that. These are part of the risk mitigants you put in place. So identifying a stockbroker, make sure you go to a firm that is either known or the MD. So make sure they are regulated by SEC and NSC, because NSC is the one that issues the broker and dealer license. Don't go to one man and co that says your money will go.
Thank you very much. A round of applause, please. Thank you, ma.